Hello and welcome back to OUTPACEsys. This is Paul with your report for the week ending on the 27th of June 2008. In a nutshell, the equities drop we initially noticed at the end of May as we watched the Dow Jones Industrial Index has since then spread to all indices and has now reached severe levels with 4 consecutive down weeks. Support levels have been broken, and unless they somehow get new strength, we are going to see further down movement. International markets are mostly doing the same. Bond markets have been in a range, trading lower, a little bit lower this week, and that has been going on for at least a couple of weeks now. After 3 weeks of sideways movement, which, as we discussed, had not yet broken the uptrend, in spite of the crowd's hopes, crude oil spiked up again this week, breaking new historical highs. Gold shared the same good fortune and is now in an uptrend, at least in the short term. So given that, we expect a bit of a further fall for at least the next several days. Markets are likely to show a lot of volatility coming up. Once again, we keep capital for long-term opportunities in cash, and for the short-term portfolio, we will be looking at short positions. Let's look at things in more detail now. This is the one-week performance for the Nasdaq, the Dow Jones Industrials, and the S&P 500, showing that they have lost about 3 or 4% each for the past week. This bearish posture that we have been following for several weeks now has been confirmed, and the support levels are now far down from the current levels. As you can see from this chart, the past month has been all in the negative, and to the tune of 8 to 10% down, and the yearly performance shows that the Nasdaq is down 5%, and the Dow and the S&P are down between 13 and 15% each. This is the weekly chart for the Dow Industrial, showing this huge spike down for this week, and this last 3 or 4 weeks building up this big downtrend. The Dow has been the one index that has had the most violent move, but the S&P, which is here, is also down under its 10-week moving average, and so is the Nasdaq. The Nasdaq held a little bit longer than the other indices in a neutral range, but now it's done itself also. The bond market moved down a little bit this week, about 2 or 3%, and it is in quite a downtrend also. The downtrend that we have discussed for the US equities is reflected on most of the international markets we follow, with the exception for this week of Australia, that has showed a very small up-close last week, just about 1%. All the other international markets are down year to date, as shown in this chart. This is the one-week performance for the various sectors. Everything is down except for the energy sector. The year-to-date performance chart is interesting because it shows that once again energy has been ranging at about plus 10% for the year, and the materials sectors that had been enjoyed the same positive attitude for several months has now started the downtrend that is common to the other sectors. Financials are down now minus 30% for the year to date. The catalyst, one of the catalysts for the actions in equities has been oil, of course. Once again, all hopes for a retreat in the crude price that have been voiced in the past few weeks have now been shattered, and crude has closed at yet another historical high and went up 4% this week alone. Now, on a year-to-date basis, it's up 50%. Gold followed some of this success this week, going up 3%. And it is about 10% up for the year to date. This is the weekly chart for crude oil, showing once again a spike. And this is gold. What is interesting for gold is that it has been ranging in this area, hinting to a downtrend, but now this has been broken with gold back up above its 10-week average. So we'll see what happens in the next several weeks. As far as our portfolio goes, the current short-term positions that we have are designed to short the markets, and of course will stay open until the ongoing drop slows down. So once again this week, no changes in our portfolio. And this is it for this week. Thank you very much for being back here. I'll talk to you next week. Happy trading!